Hi, good afternoon, everyone. Welcome to Funding a Better Future. This is a series of bite-sized episodes that features the expert insights of climate tech investors. My name is Cherry, and I'm the founder of Above and Beyond Recruitment. We partner with climate tech startups, and we help them to scale and grow their businesses, either by recruiting for them and helping them to build out their teams, or by offering talent advisory and consultancy services. This series is aimed at founders and leaders of climate tech businesses, and particularly to anybody that's looking to raise investment this year. Throughout the course of this series, we hope to give you a realistic picture of the current investment market, as well as some tips to give you the best chances of fundraising success, and hopefully a network of friendly people that you can contact when the time is right. Today, I'm joined by James Manktelow from Green Angel Syndicate. The Green Angel Syndicate is the UK's largest network of specialist investors fighting climate change with over 350 members. They've supported over 35 early stage startups, and this year they've announced investment in a company that develops biomaterials from seaweed and another in a company that are accelerating the decarbonisation of the grid. So a very diverse portfolio, and they specialise in nurturing a real ecosystem amongst their investees to help them grow further. James is one of their angel investors and a CEO mentor who not only helps with the investment into companies, but works with CEOs and leaders to help them successfully grow their businesses. So James, thank you so much for joining me.
Pleasure to be here, Cherry. Pleasure to be here.
Thank you. And so to kick off, James, are you happy? I mean, I've given a bit of an intro there as to what you do and to what Green Angel Syndicate do, but are you happy to give us a bit of a kind of broader context on the syndicate and perhaps sort of how Green Angel Syndicate differs from a sort of traditional VC model?
So Green Angel Syndicate is a group of 320 investors focused in on the climate change space, and essentially only the climate change space. As an investor, what I like very much about it is the deal flow that comes into me, but also it's the team-based due diligence approach that the syndicate gives me, and that works very well. I think from a founder's perspective, though, what it does is it gives one-stop access to more than 320 investors. And what that means is that, the very complex due diligence process, you only have to answer a question once. And as long as the question's answered properly, you don't have to answer it very many times. I'd hope that it's a very key place for founders of sort of climate tech companies to go.
Right, fantastic. And how have you noticed the landscape being this year? I mean, 2023, we had climate tech arguably had a big, as a bumper year last year. This year has been slightly rockier territory, both on a kind of larger macroeconomic picture and then with, certain situations like SVB the other week. What is your sort of perspective of the funding landscape for this year?
Well, I'd say that it's tricky, but it's not catastrophic.
Right.
I mean, my background, I'm a sort of serial entrepreneur, a fintech in the 90s, on the management team of fintech in the 90s. We exited in 2003. I founded Mindtools.com in 96, took it through to 2019, and I've sort of been an angel investor ever since. I think back to the grim days of the dot-com bust and the way things went from all the froth and excitement of early 1999, and the way that from there the next 3 years were incredibly grim in terms of fundraising, and we're in a completely different place here. On one side, inflation is high. That means interest rates are high, and that means that companies where earnings are far in the future, the valuations are just very much lower. Last year was quite a bad year generally for investors, right across all sorts of markets, and that followed on the sort of Russia's invasion of Ukraine. So that was quite tricky. And as you say, we have the collapse of Silicon Valley Bank and Credit Suisse this year. That's created quite a lot of nervousness. And obviously, Silicon Valley Bank put a lot of money into the space, and that has consequences. So, there's a reasonable amount of bad news in the market, but, there's also good news. VCs built up quite a lot of dry powder across the sort of the pandemic period, and there's still quite a lot of that dry powder left. And also, the reductions we've seen, something like 30% down, 20 according to KPMG numbers, down from 2021 to 2022, something like 30%. But that just takes us down to where we were at the start of the pandemic. So I would say the froth has gone from where we are, but good businesses, good ethical businesses, good teams, good IP, sensible PMVs, sensible markets, there's still quite a good level of investment going on.
Yeah, good. Okay. So yeah, more of a sort of market correction than anything, and still a fairly okay picture for good prospects.
Yes, it's just everything's gone sensible, and some of the a polite word is exuberance of the last couple of years has dissipated.
Fair enough. And what are you kind of most excited about this year within that? Because ClimateTech, incredibly broad market, and I know Green Angel Syndicate's portfolio is pretty diverse across a number of I think 10 or so different subsectors within ClimateTech. Are there particular pockets within that you see as being kind of most excited about or having the highest potential this year?
Well, I'm very passionate about the whole space, actually, and for me as an investor, the whole move to a sort of sustainable industry and everything means everything is re-engineered. So, fantastic opportunities there. But I'm very passionate about the fight against climate change, and I sadly think that the desire to get to just 1.5 degrees above pre-industrial levels is probably behind us now. But there's so much good tech out there. Major industry is working really hard on it. Startups are working really hard on it. There's fantastic tech coming through in all sorts of areas. I mean, I hope we can keep it to just a few tenths of a degree above that 1.5 degrees. Some will agree with me, some will be bleaker on it. In terms of sectors, e-mobility, I think a lot has been done in e-mobility. You think of electric bikes, you think of scooters, you think of EVs, everything that's going on there. But there's still a lot of potential supporting e-mobility, the rollout of chargers, things like drivetrains. There's a lot of tech that's still waiting to come through in that space. A lot is happening in built environment. We need to do a huge amount in domestic buildings, but also commercial buildings in particular. There are some really punishing, difficult standards that landlords of commercial property have to meet over the next 5 to 10 years. That's an amazing opportunity for startups, for all sorts of industries to help optimize that. We've seen a lot of renewable energy. You mentioned Picklow. Picklow is a great syndicate company, and that's all about connecting renewable energy assets into the electricity grids of the UK, the US, the EU. And there are a lot of things like that, particularly sort of operations and maintenance, where there are still really good opportunities for startups. Sensors, I like sensors. QLM, again, is a gas company. It's all about single photon cascade devices, hooking into machine learning and LiDAR. And what that does is it produces a really good low-cost methane scanner. And, there's really cool tech. And there's a lot of other stuff in that space. Final area you mentioned, biodiversity, and there's a lot happening there coming out of genomics and genetics. But what very strangely excites me most is the UK sort of kelp area. We have a fantastic continental shelf. People look at me very oddly when I get fond of seaweed, but there's a huge potential industry there going all the way through kelp farming, through to kelp refining, through to biodegradable bioplastics, protein, roughage, all sorts of things coming out of that. And that is an industry just waiting to be born, I think, at the moment. So a lot of really interesting areas.
Yeah, kelp. That you've as a recent investment in Kelpie, is that right? That are doing that.
Another one called Oceanium, which is a seaweed refinery, but there's also the whole sort of kelp farming space, and we could do something very, very exciting in that. And also, I think there's a McKinsey quote that if we properly get the whole kelp industry working, you're maybe talking about a gigaton of CO2 reduction from the atmosphere directly, and possibly another gigaton of associated benefits. So it could be, a really huge thing if we can get that industry working.
So it's a much more effective carbon sink than tree planting, but tree planting seems to be psychologically where we've all got kind of stuck from a carbon offsetting perspective. When actually, yes, like you said, kelp farming is more effective. I suppose there's a more limited amount of space in which you can do it, I guess. But,
well, I mean, there is a huge and completely unexploited space there. And I think, there's a lot of rewilding going on, and that's the Blue Ocean or Blue Marine Foundation. That's quite exciting as a thing. But the issue with a lot of it is that the kelp grows and then decays and releases the CO2. Whereas if you can use it on an industrial scale, you're capturing it and incorporating it into all sorts of other things. So you're genuinely capturing the CO2.
Fascinating. There you go. And in terms of the sort of stage of startup that Green Angel Syndicate tend to invest in, what are your kind of ideal kind of demographic, really, in terms of what stage of organization and the maturity? What are you looking at?
I mean, the phrase is TRL level 4 and above. So it's a sensible working prototype that's been deployed in a sensible customer environment. So you're not talking sort of lab bench type stuff, but things that have been taken a bit further beyond that. And what we can do is help accelerate those companies all the way through to commercialization. So Green Angel, we handle funding anything from 150K way up to, say, 4 million over multiple funding rounds. And that means, yes, we do very detailed due diligence, and that's a painful thing that people have to go through. But once founders have been through that, it means we can work with them for a very long time, helping them through a large part of the life of their organization.
Fantastic. And I noticed a recent announcement about one of your, two of the companies in your portfolio that are kind of connected and we're doing work with one another. So I like that you've got that kind of ecosystem of companies that help one another.
So that's Zedify, and you'll have seen the Zedify bikes zipping around various towns doing carbon-free delivery, fantastic. Another one is New Motion Labs. I mentioned drivetrains, and that's all about very robust, strong drivetrains for electric bikes. And there's a really nice complementarity between them. And that's reducing the downtime, maintenance issues, all of that. So yes, very nice situation.
Yeah, perfect. Love that. And so companies that kind of fit within what you're looking to invest in, if there are kind of founders listening to this that think, yeah, that's us, we're at that stage, we're kind of right for investment, what advice would you be giving to them if they're looking to raise this year, they're thinking about approaching Green Angel Syndicate? What should they be focusing on? What should they be thinking about to ensure when they have those conversations, they're kind of best positioned for success?
I mean, I think the first thing, Cherry, is the advice that I've been hearing from everybody in the investment community over the last year, which is tighten your belt, conserve cash, get to profit ASAP. This is a difficult, challenging funding environment, and this is not the time to be trying to conquer the universe. It's the time to be getting through to a successful, stable business. Second piece of advice is on pre-money valuations. There's a recent bit of research done by The Economist that was talking about PMVs dropping something like 56% between 21 and 22. Now, whether 56%, that sounds a suspiciously overly accurate number to me, but it's something to bear in mind. And if the PMV is wrong, then the company just doesn't get into any part of the investment process. It's just rejected right away. There's a worse problem on PMVs, and it often comes, so for example, crowdfunding for me is a bit of a yellow flag. And the reason for that is PMVs coming out of a crowdfunding round are often very high. That's nice immediately for the founder. But what it means is when you're coming on to follow-on rounds, that becomes very problematic. So people need to be really careful about staying real on PMVs. The third piece of advice.
And just to interject on that, how can a founder, what resources could they use to make sure that they're being realistic about their PMV?
I think there's obviously looking around on them, what are the PMVs going on now? Often the sort of public PMVs are very excitable. And it's about being pragmatic. There's a sort of angel investor rule of thumb that on risky companies, you're looking for a 10-fold return in 5 years. And that equates to an IRR of 60%. Now that's very challenging. And, that is for particularly risky companies. But if you have that in mind when you're looking at it, then that helps you think about, well, what should the valuations actually be? The reason that is so high is that a lot of startups fail. It is very easy to lose money if you're not careful from an investment perspective.
Yeah. Okay, perfect. And carry on. What was your other advice? I interjected there.
The other advice is we've already talked about Green Angel Syndicate, it is probably the most important that sounds very vain. It's a very significant syndicate in this particular space, and I'd encourage people to come through and talk to us as part of their fundraising process.
Yeah, and that's something that's been echoed quite a lot throughout the course of this series so far is that, just have a conversation, just start the conversation earlier than perhaps you think you might need to. And I think definitely generally for founders, but particularly for first-time founders, starting those conversations can feel quite daunting. And I think people feel they need to put it off until such a point as they're very ready and they've got this polished narrative and pitch deck that they can, present. But would you say, would you say you're welcome to conversations starting much before all of that information is in place?
I'd say that investors are, we're out and about and we're talking to people, and it's always a pleasure to connect with people and talk to people. I'd say when you're coming through into the sort of syndicate, the application is online, and you need a good sort of introductory pitch deck. The sensible things need to be in place, things need to be thought through. So I wouldn't encourage people to come until they've thought things through properly. And that then is the sort of time to start coming through in more detail. There's a lot of coaching that's given as part of the process. Very professional deal flow team. The guys are very, good at coaching people through, looking at sort of helping people go into the sort of pitching process. Hopefully it's very supportive, very encouraging. There's particularly a lot of support for founders from a non-traditional background too. Generally, it's a great environment, and I'd hope people find it very positive.
Yeah, that's interesting that there's a sort of team that helps to coach you through that process, because that process, like I said before, if you're a first-time founder and you've not been through that before, can feel quite a daunting process. process, I suppose. So the fact that there's somebody there to sort of shepherd you through it is used. And a lot of the language and the jargon that goes with the investment world is quite alien, I would imagine, to the majority of people that have never been through that before. So having someone support and guide you through that, I imagine, it's very useful.
Exactly, but I'd say that the best type of, certainly from my perspective, what I like are the sort of the B2B type propositions, and I particularly like strong intellectual property, typically tech coming out of a university, where there's really strong work that's been done, groundbreaking. We all like groundbreaking tech. We all like patents, things like that. So it's not quite stuff coming off the lab bench, but when a little bit more work has been done to it, there's a lot that can be done, and a lot of help that can be given to founders in that position.
Yeah.
And I mentioned QLM earlier, as in the sort of the methane, low cost methane cameras. That came through at quite a sort of early tech stage, and again, hopefully we were able to do a lot to help there.
Yeah. And were they a university spin out?
Yes, that was out of Bristol.
Ah, there you go. Exciting. Cool. Well, James, thank you so much for your time. That's been really, really useful. There've been some very, very helpful tips in there for founders around, sort of assessing their market valuation, making sure that they're being conservative with their cash flow. And then also making sure that they, feel free to start conversations with investors, but make sure that you've kind of thought through and that you've got a kind of sensible narrative to present when you start those conversations. That's brilliant. Thank you so much. And thank you to everybody that's joined us today to watch. We are coming to the end of this current series now. We've only got two episodes left, which are taking place next week. So if you've missed any of our previous episodes, please feel free to go back and have a listen. You can find the link to the YouTube playlist on my profile, so please feel free to go and have a look at that. We've shared the insights of some absolutely brilliant people across the climate tech investment space, including Systemic Capital, Nesta, Planet A Ventures, Albion VC, and many, many more. Next week, we're going to be joined by Kate Ronayne from Longwall Ventures on the Wednesday, and Pooja Balachandra from Carbon 13's Venture Launchpad will be with us next Friday for our final episode. So until then, thank you very much to James for joining us, and thank you to everybody for listening. Have a great week.